A very good evening and a very warm welcome to State of Business on our television. I'm Savindri Jayawardena. Let's look at the top stories for the day. No easy solutions to the economic problem, but ready to help Sri Lanka. IMF asserts. Corruption like bond scam should not be allowed, former minister says. News in detail. The United States District Court has recently ruled against Sri Lanka's appeal to dismiss the case filed by Hamilton Reserve Bank on behalf of certain holders of international sovereign bonds. U.S. District Judge Dennis L. Court ruled against Sri Lanka's argument that the CED authorization is defective on its face. Hamilton Reserve Bank is the beneficial holder of bonds issued by Sri Lankan government which defaulted on the bonds due to the crisis. Hamilton brought the breach of contract action to recover the principal and accrued interest owed. Sri Lanka moved to dismiss on the grounds that plaintiff lacks contractual standing. CED and Company, which is the nominee of the Depository Trust Company, is the registered holder of the bonds. Hamilton considered that it is beneficial owner rather than the registered holder of the bonds. In a letter dated prior, CED authorized the plaintiff to take any and all actions and exercise any and all rights and remedies that CED and Co. as the holder of the record is entitled to take. The judgment said the crux of the dispute is whether the CED authorization confers upon Hamilton standing to sue given the absence of a contractual provision expressly allowing such authorization and the presence of the negating clauses. The judge and a claim has facial plausibility when the plaintiff pleads factual content that allows the court to draw the reasonable inference that the defendant is liable for the misconduct alleged. As per government's plans on external debt restructuring, next steps with private creditors included engaging on a technical basis with bondholder committees, advisors, and other private creditors to ensure further sharing of information and data under the non-disclosure agreements. Establish the required restructuring discussion channels with all private creditors and their advisors. Reach agreements with private creditors and their advisors that are compliant with IMF DSA targets and comparable across different creditor categories and ensure the legal implementation of the agreements reached with all parties. In the meantime, the latest IMF deal, which is the 70th in the history, is expected to unlock sovereign debt defaulter Sri Lanka's growth potential. In a situation where the IMF facilitation has already led to positive sentiment among both local and international markets, International Monetary Fund itself also explained its program in Sri Lanka.
After years of increasing economic problems and policy mistakes, Sri Lanka has committed to reform and rebuild. The IMF is here to help. The fund has approved about $3 billion over the next 4 years to support Sri Lanka in this time of need. First, let's look at how we got here. Since 2019, significant tax cuts and delays in anticipated reforms have left the country entering the pandemic with thin currency reserves, high debt levels, and no fiscal space to buffer against shocks. With no reserves left, power cuts, shortages of food and medicine, and long lines for petrol emerged. Sri Lanka defaulted on its debt for the first time in its history. There are no easy solutions, but that's where everyone must come together to tackle this enormous problem. Sri Lankans must make efforts to continue on their way out of the crisis while supporting the less fortunate. The global community must support Sri Lanka in this effort so that it can once again be on a path of strong and inclusive growth.
Peter Breyer, the senior mission chief for Sri Lanka at the IMF, blamed significant tax cuts and delays in anticipated reforms which contributed to the economic crisis. However, he asserted that no easy solutions are there, but that's where everyone must come together to tackle the enormous problems.
Working with the fund, the Sri Lankan authorities have put together an ambitious economic recovery program. It includes reforms to raise government revenue, stabilize prices, build up foreign reserves, and safeguard financial stability. The Sri Lankan authorities are also asking their creditors to support their efforts by granting debt relief. When a crisis strikes, the poor are hit hardest. The program aims to raise spending for the poor and vulnerable, strengthen social safety nets, and introduce progressive tax reforms to ensure greater contributions come from high-income earners. With breathing room from external debt relief, we expect the economy to gradually start to recover and expand. It's critical to ensure the hard-won gains from the reforms benefit the Sri Lankan people and the crisis will not repeat itself. The authorities have committed to improve public financial management and strengthen the anti-corruption legal framework. In addition, the IMF will assess governance and corruption vulnerabilities and provide recommendations.
We'll be now going for a short commercial break.
Skoda. Simply clever.
Welcome back after the break. On to more local news. Former Justice Minister Professor G.L. Pires says that the corruption which takes place with the blessings of the politicians should be addressed first of all, as it is the main cause for the economic downfall of the country. Addressing at a media briefing on Colombo, he said that both the IMF and World Bank have even mentioned it.
The International Monetary Fund itself has stated with great clarity and emphasis that this is one of the principal reasons for the collapse of the Sri Lankan economy. There are other causes, but towering above all those causes is the issue of widespread, unbridled corruption. And it needs to be addressed. Remedial measures which are effective have to be put in place. In similar vein, the World Bank has announced that they are willing, they are happy to strengthen the agricultural sector in our country and to make substantial resources available for that purpose. But subject to the caveat, a very important caveat, that all audit must be done by the World Bank itself. They are not content to entrust the audit function to any Sri Lankan institution or functionary. That is a staggering indictment on the integrity of institutions performing significant functions of oversight in our country. It's a very sad story.
In the meantime, parliamentarian Professor Pires also said that the major corruption issues like bond scam cannot be allowed to go under the carpet and those should be again looked into. Former Justice Minister Pires also said that the government is in a plan to end the same disaster with some other government institutes such as Insurance Corporation and Sri Lanka Telecom.
The history of alienation of state-owned enterprises in our country has been a very unhappy one. Large-scale frauds have almost invariably taken place in this area. An outstanding example is the situation in the central bank some years ago, the bond scam, as a result of which the country lost billions of rupees. Nothing has been done about it. No part of that money has been recovered. The people who are responsible have not been identified and dealt with. Nothing whatsoever has happened. It has just faded into the history of forgotten things. Now, we simply cannot allow that history to be repeated. We are now in a situation where the government is contemplating the sale of state assets of very great value. The insurance corporation, and under the insurance corporation comes Litrogas, Lanka Hospital, and so on. Then there is telecom, in respect of which there are not only crucial financial issues, but also very significant national security issues impinging upon the basic security of this island. Government is also proposing to sell other assets, including the Hilton Hotel, the Hyatt Hotel, and so on. Now, we absolutely insist that there must be total probity, honesty, rectitude. Absolutely. There cannot be a shadow of doubt about this.
A recent survey done by the Ceylon Chamber of Commerce highlights the decline in national exports for the second half of 2022 and the first quarter of this year. The fourth export barometer survey conducted by the Chamber of Commerce covers the second half of the previous year and the outlook for the first year of this year. The survey revealed that the fall in export orders led to significant underutilization of capacity within the export sector, which will be expected to continue in 2023 as well. According to the survey, exporters think that the negative image of the country and domestic regulation were key challenges for them during the second half of 2022. Accordingly, firms had to focus their attention on retaining existing clients that were looking to move to competitor countries due to the negative perception of the country. As such, the thrust of finding new buyers and venturing into new products and services was limited. It was mentioned domestic regulations such as import restrictions and clearance delays at the port were cited as some of the domestic constraints. The emphasized concern, however, is related to labor, where a higher labor attrition was recorded compared to the past survey, as migration could lead to skills shortage in the medium to long term. SMEs, who were 71% of the respondent firms, stated that foreign exchange crisis hampered their ability to export due to loss of suppliers or delays by suppliers. In terms of the outlook for 2023 and in particular the first half of 2023, export firms are more optimistic in their views on the economy relative to 6 months ago. However, their outlook on export orders remains the same, highlighting a likely slowdown in export growth during the first half of 2023. It further mentions in order to counteract the slowdown in exports led by the global shutdown, it will be important to maintain economic and political stability, continue to provide uninterrupted power supply, and assist firms with market access opportunities. Stay tuned for stock updates. Welcome back after the break. Trading at Colombo Stock Exchange ended on a positive note today. The all-share price index gained 65.95 points to close at 9,322.86, and the S&P SL 20 gained 42.10 points to close at 2,728.01. The turnover was 1.2 billion rupees and over 75 million shares were traded. Up next are forex rates. And that's all news for today. See you tomorrow with State of Business at the usual time. Until then, take care and good night.